Hello, Warriors. New week, new month. Let's have a good one. Who's ready to fly in July? How you doing, Ingmar? Bran? We stayed in tune in June, which wasn't easy. Bran, how are you? Sinatra? Mike, how are you? Ryan? Ryan's very happy that England won. Let's see, Glenn, James, Kman's here today, full team. Blake's here. George, you look like a new attendee. Welcome to F.A.C.E. You found the right place. Okay, I'll stop rhyming. So let's start off. Good morning, Ryan. Why don't you give us your impression of the French elections, part one, and if it sets us up for maybe surprises next week. How are you both?
Morning, Dale. Hope you're all right, mate. Hope you had a good weekend.
Yeah, 103. Good for lizards. So congratulations on, wow, how England squeaked it out yesterday. Huh?
Yeah, bit of a squeaker. Yeah, you can say
They
that
were
again.
almost stopped out, and
Yeah,
the game was a
came
tick
3
away
pips.
from. So what do you think of that? The election results. We did leave a gap, okay,
Yeah,
on my platform. I went with it. I had this little neckline. I would just want to talk to people. So I got flat euro because of the election, and this is something that takes a while to overcome. But a lot of people and myself at times would go, well, I got out at 7:15. Am I willing to pay 20, 30 pips more than
yeah,
I want to get in at a better price I got out of. Okay. So get rid of that thinking. Okay. Because the market doesn't care where you got out. All right.
yeah,
And want to accommodate you to get back in at a level or better that you liquidated at. You just have to take the market where it is now. What's the right thing to do? So, I went with the gap. To me, it's a signal. I had this little blue line here. I'm
yeah.
wrong a little bit underneath the gap. I'll give it Friday's low, around 690. You think this gap could hold, Ryan, or it was just another area gap? Area
Yeah.
gap or breakaway gap? What's your vibe?
No, yeah. I don't think it's a breakaway gap. It's too small a gap. I mean, we're talking, top to bottom 60, 70 pips between last
True.
week's range and the high so far. So, it's a small gap that'll get closed on a bit of data. But you're right what you're saying. You've had your break above your blue line. That's your indicator, at least from a short term perspective, to try it.
Right.
But it's you move into what has it got to do now? What
Right.
didn't it do last week that it's got to do now? Well, for starters, it's got to keep the gains. And yeah, the elections pretty much followed what the polling has been since Macron called the election. So there's been no surprise there, which is
Okay.
why the market's up, kept a little bit higher, bit of sell rumor, buy fact sort of thing.
Okay.
It does create a bit of a mess because it's not looking like an overall majority for Le Pen, so the market's a touch happy with that. But on the other side, it could mean a hung parliament and months of French squabbling, which is not good for them as a Eurozone country, not being able to pass stuff. Not good for investors either. So I think there's some short-lived positivity about the
Relief.
fact
More
that
more relief. More
yeah,
relief short-term relief. So does this provide a shorting opportunity, this little pop here and this little pullback in the dollar to buy the dollar? Short,
well, I think
short.
we're
Go
back
ahead.
to trading the data points. Okay, next Sunday is another time. It's a lifetime away in trading, but that's the next risk event, and we can't do anything till those elections happen. And we've got a shed load of data this week coming out, and the market's going to react to that. So we've got ISM later today. We could be trading at 106.80 in the euro on a really strong number, we could be trading at 108. So if you're trading the elections, you've got to put that to the back of your mind for the most part of this week, and just trade all the data that we're getting.
Okay. Yeah, you know, there is one thing that I think was significant on Friday, and it was rates. And, you know, the explanation was, well, Trump, you know, creamed Biden in the election, looks like the likely victor in the election next November. And, you know, it's a type of thing where in one day, you know, TLT has done a lot of good work since its lows. Whoops, didn't mean to do that. But one day changed the picture for me. To where, you know, I was constructive, I was actually bullish, and
Yeah.
just what happened here gets me at least neutral. I mean, I'm not buying them here. I mean, it's possible that we're just going to retrace in here. But does Biden drop out? I don't know. I'm just talking about the charts. So I don't know. It looks kind of ugly to me. And I thought that we were going to take out 420 in the 10-year, and I don't know where, you know, I know if it does take out 420, it's negative, but right
Yeah.
now, I don't know, you know, when it's going to resume, or if, you know, we're just headed higher.
It's,
So
it's
go ahead.
exactly what we've been trading. You know, you get a day and you think, hey, this is going, you know, this asset's going, it's on its way, it's had a few, you know, good gains, and then it just gets a kick up the arse and does a 180 on you. You know, that's why you can't marry a position for long these days, and you've got to take some money when it's there for you. I mean, that pattern there, if you take it from the the late April low, it's
Yeah.
got to be
Yeah.
around about a 38.2, isn't it?
Right.
That the bottom of that daily candle now, around about there, might be a bit
Yeah. I'm not sure
lower.
what kind of retrace it was, but it was like, you know, it pulled back to the bottom of the wedge, failed
Yeah,
auctions here. Um, but, you know, this is not just day to day. This was a lot of great action
yeah,
all the way here. But, you know, 93 looked like a breakout. So, you know, under 93 had to get out of the way. But this is more like one day shakes up, um, you know, 2 months of nice action. And
yeah,
that's what this business can do. One day can negate months of action.
yeah,
You know, you have to be prepared and go, well, you could rationalize and say, well, it's just one day. It does one day doesn't make a trend, but a candle like that is, you know, kind of cracks the technical momentum pretty big. So,
yeah.
you
If you're
know,
trading that on the short term, that candle's a punch in the gut. But if you're trading
yeah,
it off this chart here, that's a
yeah, it's
pullback.
a day,
You get
and this is a daily. It's not a short-term chart.
yeah, but you get down to that moving average and that green line, whatever you got there, and
Yeah,
got to be thinking about longs.
yeah, you got to be thinking about it. Maybe that's it. It's just a correction. Maybe people got too um, bullish the bond market, but that was a pretty convincing day. And I just want to leave it with looking at some of the mega cap tech, because Goldman reported there was huge selling in June, a record amount of selling in mega cap tech in June. And, you know, just want to just look at a few things. That doesn't look good, you know, looks like a little bear flag off of that. But a lot of the mega caps, here's Amazon. I didn't short it when we had this candle, but back under 190, you have a false breakout. Um, Meta, Google could get, you know, back to the old high with the Qs making a new high. Uh, I'm just showing you stuff that would you buy it up here? Google, I know it's been acting good, but you know it's been diverging since February. So if it's a momentum stock, it certainly isn't gaining momentum, it's losing momentum. Then
Yeah,
you have something like Netflix just grinding up. And this would be another example like the bonds. All this good action for months, you have one bad day, it's going to change the complexion of the market. Here's Microsoft. It's been one of the stars, put in a pretty ugly day Friday. And, of course, NVIDIA uh, looks more like a bear flag. Even with the market opening higher, NVIDIA is called lower. So, I would be careful with this stuff.
Yeah.
And,
In every one of those charts, I can see, even though you just quickly flick through it, I can see every support level you need to watch.
right.
180 in Google,
Yeah.
650 in Netflix. You go through them all. So there you go, 180. Down under 180, trade looks
Yeah.
dodgy. Six,
Yeah.
or call it 660 maybe in
Yeah.
Netflix.
So at the minimum, doesn't it look like it's primed for a correction? Primed for a pullback. If you're a bull, you wait for those pullbacks, but I don't know about chasing it. And I think when you get stats like that, when something's a record amount of selling, not
Yeah.
just, pretty high, high levels of selling, but a record of selling. Um, so just something I, that I learned about from, doing my research.
Good eye, mate. Good
Be
eye.
careful. Huh?
Yeah. Good eye. You're
Yeah.
spotting them all. You're spotting all the levels.
Yeah. So yen still marching around. Let's say hello to Kman. How are you today, buddy?
Hello, Dale. Hello, everybody.
How are you? So
Yeah,
we're
not too
still
bad, not too bad.
march. We're still marching.
Marching on. When the yen is marching on.
Yeah.
Yeah, I mean, Tanken was even pretty decent, but there's no stopping us now. I mean, the thing is as well is that yields are higher, so that de facto keeps the yen offered. But yeah, and then we had the excuse of a bit higher euro at first, dragging euro yen higher, but all the yen crosses are still marching on.
Yeah.
It's only intervention still right now, that could help the yen in the advent of the Bank of Japan, but it's only end of the month. And I am come back to what you were saying earlier. We were end of quarter, end of half year last Friday. All those bonds, equity, you name it, rebalancing in all forms and shapes. I got the impression that we need to wait for today and tomorrow to see if those levels are going to hold, if we continue to go higher in the yields also, because I don't see too much of a fundamental reason for those yields to creep higher, and they all are. So I really trust that there's been a lot of end of quarter stuff in there. So I'm very curious to what's going to happen over the week on the start of this week on the bonds and on the yields. It's going to be a pretty hefty week as well, data-wise, meeting-wise. Powell is in Sintra tomorrow. It's a big week this week actually, and then throw in the mix 4th of July. You guys are
Yeah.
on holiday.
Yeah.
We have UK elections here, and then 5th of July, when the people are on a long weekend, we get the NFPs out. I think we need to be a bit on our guard, not to let things derail in the positions because it could really move a lot.
Okay. Any vibe on the metals here? Okay.
Yeah, I
You.
find them, that's what I said this morning on the flow show and in the room as well. I find them holding extremely well despite higher yields, despite the risk that we had in the geopolitical side in the Middle East, not really giving reason for more concern. This thing is going to drag on, but situation with Lebanon and stuff is not over. But I'm finding them holding extremely well in current context. I was thinking that, okay, first round of the French elections over, yields a bit higher. Perhaps gold should be trading closer to 2,300, but it doesn't. It doesn't give back anything. So I'd say range for now, but that's going to
Yeah.
be moving if ever those yields come back down. Imagine perhaps a slightly slightly weaker data. I think we are perhaps preparing for another leg higher.
Okay. Does it bother you at all that gold is outperforming silver, which has
No,
been a shift?
not at all.
Not at all. Okay,
No,
so
I
bullish.
handle both separately. I'm long both. Not much. I still keep a lot of room in the book to add to my long-term silver and gold as well.
Okay.
No, it doesn't bother me that they move at different speeds. For silver, I'm going to look at the economic data because if they would deteriorate, then gold should outperform, right? That would be the logic. But no, I mean, for now, no, it doesn't bother me at all.
Okay. This would put, the way this looks kind of just like a little recovery from a confirmed low that would imply that the gold silver ratio is just a bounce, could call it a
Mm,
flag, and that we should retest or take out these lows, which means, we're not far away. Gold has been outperforming, but this
mm.
heading south would change that too. So,
To me,
um, go
yeah.
ahead.
To me, rather than telling me something about the dollar, is telling me something perhaps about the state of or the expectations of the state of the economy. Because silver being that industrial metal, if things turn sour, the gold silver ratio should go up, right?
Hmm.
But yeah, I mean, right now we're still expecting all those data, and so we need to really be vigilant to what's to what it is all going to tell us.
Okay. WTI moving sideways above this, you know, uh, former resistance line. I'm bringing Blake. And Blake, how are you?
Hey, good morning, Coach. Happy 4th of July week.
Yeah, you too, buddy. So really was cooking here over the weekend, and uh, thank God for soccer on TV. Is
Yeah,
what I
yeah.
would say.
I was joking with Ryan and like in the room, like, man, you must have been screaming at the. Were you at the pub, Ryan?
No, I was watching it at home yesterday.
Oh, okay. Well, I picture
He
you were
has his own
screaming and
pub
throwing
there.
things. That was like an amazing last, I mean, and what we
Yeah.
were in the last few seconds of the extra time. It's like, oh my God, what a bicycle kick. Anyway, yeah, I actually really enjoyed watching that yesterday as well. So hey,
I'm glad someone did.
oh, I'm sure you were just irritated the whole time.
Yep.
It was a nice win. Nice
It's
win
how
for you
you
guys. So.
finish.
Yeah, that's right. And that's the thing about football. It can it can change at any moment. Anyway, you were asking about crude, and we're sitting at the 618 retrace here. I'll take the chart real quick,
Okay,
Dale.
buddy. Yeah.
So we're sitting at the 618 retracement. One of the things that we've made note all week is that pullbacks have been very minor. So while we're above $80, there's no reason to be on the sell side or to be bearish. But at the same time, we are obviously consolidating around the 618. And the thing about crude is it is not backing away. And that's, key level or not, it's still, I mean, if you're short, you probably got to be thinking, oh man, this thing looks pretty, like it could squeeze even further. I think where we're probably going to be challenging is around this 84 level, which you can see as previous highs over here. It's the 78% retracement. It'll be the underside of this channel, previous channel anyway. So I think this is going to be where, the rubber meets the road, but it sure does feel bullish right now. It looks like it wants to continue to grind higher. And this is one of those things that I think we should all be watching really carefully, because I think a lot of us probably look at crude oil and we think about like the summer driving season and higher energy costs. If there's something that's going to send the economy into a more of a recession, at least from the consumer point of view, is just higher energy costs. I mean, electric costs are supposedly very, very high this summer. With inflationary pressures, with the increased heat, then you tack on some energy costs, and price at the pump starts going up. I don't know if it's going to happen during an election season, but it is something that we should be watching just in case it starts spiking. I don't think the market's going to take too kindly to it. This is one of those, it's at a funky level in crude oil where sometimes a rally in crude, you go, oh, look, the economy is expanding, you know, there's demand, yada, yada, yada. I actually think that higher energy costs from here is going to be more of a negative for the macro picture, because it's really going to impact the consumer. The consumer, from everything that we read, is just, you know, being really stretched as it is. So higher energy costs is not going to be good. Anyway, that's just kind of how I'm looking at it right now. I wanted to you know, you'd mentioned, Dale, about the 10-year, and I do want to point out really quick, and you can see the update here. Let me get over to the updates in Boons. Take a look at the German Boons. They came down as they were consolidating around the 200 DMA, obviously because of the weekend, you know, we gap lower below the 50 DMA, but we're just challenging that previous channel. And that's something to think about, just because if you are trading Boons, this is only the first round of the French elections. We have the second round coming up this next weekend. What are the risks surrounding the second round of elections, Ryan? What do you think? You mentioned, you know, you talked a little bit about it today, about, you know, what happened over the weekend, but what's the real risk going into next week or next weekend?
The real risk from a market's perspective is probably well, several risks. Is a majority for Le Pen's party, because that's
which she kind of got knocked down. She didn't get as much support as the market was thinking she would. Is that correct? That a correct assessment?
She got around what had been polling for the last 2-3 weeks, so it was no surprise there. As I say, the risk is that she gets a full majority, because then she's in charge, lock, stock. The other risk is that there's no majority, and there's going to be a lot of horse trading this week, people pulling out of, you know, different constituencies. Everyone else other than the RM party doesn't want the RM to get a majority. So they're all going to be working together to try and stop that. Not to try and gain the parliament themselves, but just to stop her from getting it. So likelihood is that we're going to have a hung parliament, which just means an absolute mess for anything moving forward. And that also is market negative, because the market never likes uncertainty in politics. And then you get the rating agencies, you know, cutting ratings and all that sort of stuff. So longer term, it's what happens after the election. Shorter term, it's the noise into the election.
All right. Well, you know, we're seeing you know, French yields continue to well, we continue to see them compress up against German Bund yields. And is this the chart that we still need to be focused on, Kman? What do you think here?
Well, in parts it will be. Well, the other one is perhaps the rebalancing a bit in the CAC, but that may be a typically European thing that we're seeing. They're both up, the CAC and the DAX, but CAC a bit more, which is logic. Well, I think the risk going forward into the second round is to see who is going to go in ship with who. Because if Macron needs to make too many deals with some of the far left that are a bit of a mess, I think that's going to be your risk, because they may then end up not being able to counter the far right. Yeah, there's still a lot of European water to flow under bridges before, into, and even after that second round. Because imagine that they fail and that Le Pen gets an overall majority, that would really put the cat amongst the pigeons, because then Macron doesn't have a leg to stand up on anymore.
Got it. Thank you very much. And in case you guys missed it, just FYI, the euro, you know, all it did is it rallied back to the 50 DMA. This is we were looking at this range. If you don't recall from Friday here on the F.A.C.E show, we were talking about this is really the range we need to be looking at. You know, obviously the 106.50. and then back at the 107, 80s, 108, because that's where the 50 and the 200 DMA is. And overnight, we just basically hit the 50 DMA and came off. So you can kind of see your levels that you have to be dealing with, that you need to be really focused on this week, regarding the euro at this point. And yeah, we're seeing a little bit of a pullback right now. Matter of fact, the Aussie's coming under pressure right now as we're trading a new low. Say with the Kiwi, dollar yen spiking back to highs here. Dollar yen, as Kman mentioned a little bit earlier, there's been no backing off there. And one of the things that happened over the weekend is the dollar rand got slammed down because cabinets starting to get picked right now, and new government officials are being put in South Africa. So we saw a gap lower over the weekend, but we're trying to fill that gap, fill that gap right now in the dollar rand. Did you have, Kman, since you're here, do you have any opinions about what's happening with the rand right now?
Yeah, we had this little positive impulse because DA finally got the Democratic Alliance finally got what they want, but then they also renamed a few of those positions. So I think it's still very touchy. As I said, I haven't re-entered, but sub 18 we still find buyers in the dollar rand, and that is now that the government, the cabinet is formed, we will need to see exactly what they're coming up with as rules and regulations. And I still don't like it in general, because of the risk that there is between South Africa and even China and Russia, but perhaps the DA is going to try to undo some of it. But at least the investors are telling us that they still don't completely buy this because it's now already 1% off from the lows.
Yeah. Okay. Yeah. I mean, that's a hell of a recovery overnight. I wasn't really expecting it. I was like, are we going to break down? This is what I was thinking yesterday, before I went to bed. I'm like, are we going to break down below the 1790 support? And obviously, as you pointed out, investors are, thinking about this and maybe a little bit more nervous. So guys, we got obviously ISM today. Dale, what's on your radar this week? I mean, mine's going to be, obviously, drinking some beers and hanging out with my friends in California for the 4th of July. But what are you thinking for this week? You got anything that's hot on your radar for the week?
I'm thinking I need the address so I could get out the desert and meet you.
Come find me on Mission Beach, buddy. I'll see you there.
All right. Okay, I'll just go there and look for you.
Just find me
among
there.
a million people. So Blake, I come into this week after what happened in the bonds, because that was a big part of my narrative, without a lot of conviction. So I always feel uncomfortable when I don't really have a lot of conviction, but I have to, as years pass, I learned to just accept it, and that I'm doing more watching than trading this week. The bonds kind of changed the picture for me. I bought a little vol on Friday, and someone asked in the chat room, how do I manage risk when I'm buying vol? Sometimes I buy the products. Usually I'll buy options. I'm going way out to December. And as a rule, I'll risk half the premium of what I pay for calls or puts, and that's how I manage risk
Got it.
on
All right.
options. So,
well, thanks, Dale. I'm glad you mentioned that you're buying volatility. And this is something that I want make sure everybody is aware of. For the month of July, if you take a trader funding program assessment, you will get a one-on-one consultation with me, 45-minute consultation with me for all assessments this month. I did one for a new trader. She's been trading for like 8 years. And so she's very well skilled as far as trading goes, but she wasn't aware that she had access to ForexAnalytix, our private shows like the Morning Edge, our chat rooms. So it's really important. What I found, it's really important that if you're going to be involved in the trader funding program and taking advantage of the higher volatility, doesn't matter what assessment you're taking. If you take an assessment for the month of July, I'm going to give you a one-on-one consultation because I'm going to obviously explain to you what all tools you have available to you, but I'm going to also explain to you how I pass an assessment and some of the tips and tricks that I've seen with traders that have passed and are continuing to pass and how they do it. So this is a great month to be doing that, especially taking advantage of the higher volatility. So I just want to make sure that everybody is aware that the month of July, that is what we're doing. I think it's going to be a huge benefit to the traders that do so. So with that being said, oh, I didn't mean to do that. With that being said, Ryan Kman, I know, do we have an interview today, Dale? Do you?
No, not today, Blake.
Oh, not today. Okay. So so we got a couple minutes. Ryan, what are you looking at this week? What's on your radar? Because for me, I still like this dollar max, and I'm just going to throw that out there, but I'll talk about that after I ask Ryan and Kman. So Ryan, what are you thinking about this week?
Everything. We got everything. We got more elections. You guys clearing off for a long weekend.
Wait. Can I interrupt you really quick? I meant to ask you this. With the UK election, there's a lot of people that think this is going to be sterling positive, right? Do you feel that way?
I think it's going to be mildly positive in the initial outcome if there's a majority government, because again, that means stability. And then from there, you move into the longer term stuff, what the policy is going to be, what's the next budget going to be, how much is it going to cost everyone, and that will be the next sort of mover. But initially, as long as there's no mess, hung parliament or anything like that, then it should on paper be mildly pound positive.
I mean, you've had the same government for how many years? 14 years?
I would say too long. It's been quite a long time now with the same government.
Well, I'm asking this really quick, just, wouldn't this be like a great short in the euro sterling right now? Because if you're going to get mild, pound reaction, and then you still have European risk over the weekend, isn't the euro sterling a good short around this 85 pence level?
Great look.
Guess which way I'm positioned.
Long.
Oh no, so you're fighting my pattern in play right now?
No, I'm short.
Oh, you are? Okay.
I
put that in last night
week
because I was like, man, that's the pattern in play that I think you got to play it, right? So
I was holding shorts last week at 84.61 for a bit of an election play for France, and we've got a big level here. How long have I been banging on about the 85 level when we were above it, and we've hit it on the head, and it's resistance. So I've had a little short up against it as well.
I'm with you, man. I totally am with you. I was like, that one is the play. All right. So anyway, cool. I didn't mean to interrupt you about the UK elections, but yes, we got all these elections. And what else is, I mean, we have non-farm payroll, we got ADP, weekly unemployment claims. I mean, the whole gamut's this week, right? And low liquidity.
Canada jobs. It's all dropping to this week. Busiest week of the month as always. So I'm just going to roll with the punches as far as the dollar's concerned.
All right. Kman, what's on your radar? And Nuno asked, hey, you have any idea about the 6J? Because the 6J, I mean, this is we're just right back at these levels that we haven't seen since ever. No, I'm just kidding. Since the 80s anyway. But what are you thinking this week?
Well, I mean, I'm not fighting it. I mean, I'm just watching it go down until they intervene. There's not a lot to do against it right now. You're short dollar yen, you're just crying. I think euro could lose its shine a little bit, although we're seeing a few crosses tick up. But I kind of agree with the euro sterling as well, because the technical level is pretty clear. No, I'm really curious about all the data that's going to come out this week, because if we see anywhere slowdowns, I think the metals could really take off. I got the impression that we missed the opportunity in the round to buy 18 and below. Yeah, I'm quite surprised actually to see those yields in continue to tick higher. I don't really know what's going on right now because I don't see any fundamental reason. So I think there we need to be careful. You look at the US 10s; they're at 444 right now, which is pretty lofty, you know. Yeah, I mean, and that if there is a turnaround there, I think the dollar could. For once, I'm not really dollar bullish. I'm actually looking to the other side. If I get any hints that the party may start to come to an end in the US, I think a setback could be on the cards. But let's see. Let's see. I'm not really engaged in any heavy positions right now, keeping a lot of powder dry and open to anything that may come up really.
Yeah,
About it.
I was gonna say I'm with you.
Still
But
don't
let me
like the
ask you
euro.
this. Let me ask you this question, Kman. So I want to just show you guys the Aussie. So we you know the Aussie is obviously flirting with this. I mean, we're stuck. We've been stuck for like literally 2 months. We're flirting with this major multi-year trend line. It I want and Ryan, I'd like to get your input here too after Kman says his piece. If stocks, let's just say, we start to see weakness in US data. Okay, that fine. This week, all of a sudden we start looking around going, oh my God, the US economy might actually slow. And let's just say that's our takeaway at the end of the week. Come Friday, we're like, okay, the US economy might actually be rolling over. Now, the US dollar more than likely will be under pressure. You know, we might have, you know, sterling back at 127, 128, maybe dollar yen back below 160. Where does that put commodity currencies? Do you buy commodity currencies like the Aussie because of the weakness of the US, or do you actually sell the Aussie or sell the Kiwi because growth is slowing and these currencies are going to underperform? Where do you stand on that?
Well, it depends what your equity market is doing.
Right. And well, let's say equity
Your
market
equity market is
finally
going down. You don't buy
is,
Aussie or Kiwi, right? I mean,
yeah.
that's something that I mean, being said probably 150,000 times over the years. I mean, those
Right,
are
but
risk
you believe
currencies.
that even if this correlation you believe will take hold then.
Well, yeah, but you don't sell Aussie or Kiwi versus dollars if the dollar is going down, but you don't hold Aussie or Kiwi versus crosses, for instance, because they tend to weaken. Same thing is happening with stuff like Norwegian kroner and Swedish kroner. Those are your Aussie and the Kiwi of Europe. You don't hold Scandies when risk is coming down. That's the same thing. But yeah, I mean, there will be a dollar effect if the economy really goes pear-shaped. But there's better stuff to hold, and yeah, I guess even sterling is a bit of a risk currency, but sterling could be one. And metals, metals. I think if stuff goes pear-shaped, and then first of all gold, I would say. But metals, right? Those should do really well.
Yeah. All right.
Yeah, that's about
Let
it.
me ask Ryan that. Ryan, what do you think about the Aussie and the Kiwi? Because I think this is a tricky one, and you can see the range is so tight. I mean, I would say technically a break below 65.80 or a break above 67.20, you got to play it. But would you want to be playing? Let me just say it. Would you want to be playing it on the long side if US data starts to weaken, the Aussie dollar starts trading higher because of a weak dollar, and then the stock market starts coming down? Would you actually play that to the long side? Or did he leave? Oh, I think Ryan took off. Dang it. All right. Well, I don't know. I'm a little undecided. I'm not sure exactly what I want to do here. I'm just gonna throw that out there. Dale, I don't know if you have an opinion before we go, but that's what I'm thinking. So
On the Aussie, maybe we pull back to 5.5. Could happen.
Yeah, I mean, I don't know. I think this is the range that I'm playing out of. I just don't know how I want to play it. But hey, dollar yen is taking off, guys, with yields, and dollar yen's trading at levels we haven't seen since 1987, I believe.
Oh, that was a good year.
Yeah, what were you doing in 1987? Dale was wearing neon pink.
Yeah.
And
let's see, I
and
was in Phoenix. I had an office on Central.
and singing "Hungry Like the Wolf" as you were driving in
Was
your
didn't start my new
convertible.
singing career yet. I was, pretty much into commodities. I watched the crash from there. Went down to, I don't know what the bank was in the building there on Central, but they didn't seem to think anything was happening. I
Oh
went
man.
down.
Oh, the savings
Remember,
and loan,
I
what?
forgot what it was, but yeah, that's where I was in '87. I watched it from an office on Central in Phoenix.
All right.
So
Well, I'll tell you, Dale, it's been one hell of a ride, and here we are again. So, guys, I just want to say thank you all for joining us today here on F.A.C.E. Dale, I'm gonna pass it off to you.
okay, thanks, Blake. So everyone, admit if you don't have conviction that it's okay to do nothing, even though it makes you feel uncomfortable. There is that old expression that we're paid to wait, even though no pips go into your account. And tread lightly. I think volume's going to be thinner. Blake's not the only one that's going to be taking a vacation this week. So just be careful. And I guarantee you this, when I go through periods like this, sometimes it's only a day or two later, things will clear up for me. And that there'll be something compelling enough that I can't not do it. And I think that during times like this, it's great to be part of a community to hear that. And possibly when you're not seeing anything, the other eyeballs in the community might be able to point you towards something you're not recognizing. So join join ForexAnalytix in July and give it a try. And don't just count your pips, count your blessings. And uh, I'll be here for Turnaround Tuesday and the rest of the week with you. And I'm sure Ryan and Kman will. Blake, have a great time. You
Thanks, buddy.
deserve it.
Appreciate it.
All
Thank
right,
you.
that's a wrap. I'll have Kay and Ryan to keep me straight all week. So we'll see you, and we'll be here for all the data and try and keep you guys away from the landmines. That's our gig. And have a great day. Enjoy. Adios. See you, team.
Ciao, everybody. Thanks, Dale.